is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome to the Money Master Show, folks. Steve Rhodes here. Tom is out purchasing real estate. You got to love it. Even the news out today, I believe that the housing starts, increased to a 4-year high today, folks. Real estate, that is where it's at. In fact, go to the homepage of TFNN.com. You will see in the breaking news section, you'll see the link for the bull market in Florida. Housing, the little white paper that Tom had done. You certainly want to familiarize yourself with that. Also, over on the right-hand side, you will see a button there for the Tiger Real Estate Opportunity Fund. If you are a qualified investor out there, maybe you're taking a look at where it is you should park your 401k funds, or maybe just to diversify your portfolio, it would be worthwhile for you to check out for sure. Also, as long as you're over on the homepage of TFNN.com, and it's a good place, a good landing page to start your day, you will also see under breaking news a survey that TFNN has put together, and the survey really is to benefit you. Now, it's got really two benefits. One, you'll provide us with some information so we understand the type of a trader/investor, so that we can make sure that we tailor content for you. And also, you'll get 25 Tiger dollars. So if you do use TFNN services, or you have used TFNN services, simply go over and you'll get $25 put into your account. And if you haven't, you really should. You'll be able to use that at the Tiger store out there. So go to the homepage of TFNN.com and fill that out. It will not be up there for very long. So, don't procrastinate. Just simply do it. It'll take you about 5 minutes or so, maybe while you're having some coffee and donuts. We were taking a look at Krispy Kreme donuts and Green Mountain coffee during the early shows. We take a look at the markets here. The Dow is off 52 points right now. S&P is off 3. Composite down 5. Small caps off 2. New York Stock Exchange down 23 points, down about 0.3% out there. The NDX 100 strong, long and strong, down only 5 points. That's 0.2% out there. Transports also down 0.2%. Over in Germany, they're not paying attention to the rest of the markets. Germany, the DAX is up 28 points right now. The FTSE off 6. We'll go over and take a look at what is going on in Europe out here. So let's go over to those charts. We'll take a look at currencies and anything else that you'd like, just simply by giving us a call at 877-927-6648. So now let's go take a look at our world chart button out here. We're taking a look at the DAX. The DAX getting back inside this little horizontal sideways trading range that it had been in. The area that it really needed to get into in order to get back inside the range. It's really inside there, in my opinion, would have been the low from October 24th out at 71.20. The DAX at 71.50 right now. The DAX had a nice, strong day yesterday, having some follow through today as well. And the DAX wants to get all the way back up to the top of its horizontal trading range. That would be in the 74.35 range out there. Also, the DAX wants to get back inside. Let me just get rid of this line here. The DAX, will just pull this back, wants to get back inside its trading range altogether. Now, the DAX here, because it has been so strong, may be one of the indexes, or should be one of the indexes, that we'll want to pay attention to see if it gets back inside this long-term channel. Now, we talk about this long-term channel here in the DAX only goes back into the September 2011 timeframe. When we go take a look at, we'll actually take a look at the weekly charts in our U.S. markets that go back into the 2009 timeframe, just to put things in perspective for you out here. So the DAX trying to get back up. The first thing it needs to do is test the low of that price channel out there. Once it does that, if it gets back inside, then you can see the DAX certainly travel up to those highs. Again, that sideways range in the 74.34 level. Let's go take a look at the FTSE in London. See what the FTSE here is doing, having a very, very strong day yesterday. That is one wide-ranging bar out here, engulfing the prior two sessions. That candle still holding up. You can see here the bulls certainly in charge. And you say, how do you know that, Steve? Well, just take a look at that candle. Take a look at the wick here. You can see how the bulls tried to take charge during some point of the trading session, and the bulls stepped in. So you've got this little long wick out here. It says the bulls are still around, and they're just waiting for the bears to sell off a little bit. Let's go take a look at Asia. Let's see what was going on in Asia last night. You had the markets down there, not too substantial. The Nikkei had been up huge over the last couple of trading sessions. The Nikkei went from a low just a few trading sessions ago, started off the November 15 time frame out at about the 86, 84 level, closed out last night at 91.42. If we take a look at what this was doing out here we go. Making a 1.272 expansion of a swing point, that swing point being the high of October 26th. That was at the 9,075 range all the way down to the low that was put in as it did a 0.786 retracement, that low from November 13th out there, out at 86.19. So makes a 1.272 expansion, gets back, also makes a 100% move of a move. That was coming into the September 19th level. That low 91.40, it closed just above that. The Nikkei wants to run higher out there. Let's go take a look at the Shanghai and the Hang Seng just to finish things off here. We take a look at the Shanghai out here. Shanghai moving down back to the bottom of an area where it had recently broken out. That was, well, when I say recently broken out, that takes you back to September 27th, 2012. Now, it also had broken out on the 7th. But right now, 7th of September out here. So right now, the Shanghai coming back, testing that area. Looks like it tested it. The volume that it was going against was 76 million shares, 76 million or billion, and only had about half the volume coming back in that area. That says the Shanghai probably wants to bounce tomorrow's during tonight when it opens up out there. Let's go finish this off and take a look at the Hang Seng, see what the Hang Seng is doing. The Hang Seng closing down today, last night, 33 points, about 0.1%. Let me update my chart here because I don't think I have the... I do have the updated pattern. So the Hang Seng opened up and sold off all night, actually closing at its session lows. Unfortunately, I don't have the volume out here, but not taking out a swing point. The swing point low would be November 15th, 21,098 out there. Let's go take a look at the currency market. Let's go see what we have going on in the currency world. We do have the euro chart. Excuse me, we're going to put the daily chart of the euro. What we see here yesterday, the euro breaking this little bearish downtrend that it had been in this descending price channel. Yesterday, it broke through that level. This morning or during overnight hours, came back, tried to test it. Whenever you break a channel, it's going to go ahead and test it. That test, in the lines here, maybe could be drawn just a tad different. So very close to having tested that area, rejected it. You can see the bulls still here in control. Having a little bit of what we'll call a doji day. I do expect that what we'll see our markets do is end up perhaps just slightly. A lot of energy yesterday needs to build energy, as Tom likes to say, build cause in order to move higher. And that's exactly what the markets are going to do out here. They gave us all kinds of signals. All kinds of reversal signals are out there. So I say if you are a bear, you need to really beware. And you should understand the candle signals that are out there. Let's go take a look at the yen, see what the yen is doing out here. You have the Japanese yen trying to get a little bit weaker against the U.S. dollar. You can see the yen here up against some pretty stiff resistance. You're taking a look at retracements or expansions off of swing points. The yen makes a 0.618 retracement off of the swing point high from March 15th out there. That level is at 84.17. That's from the high down to the low swing point on September the 13th at 77.12 out there. So it makes a 0.618 retracement. Also makes a 100% move of a move, makes a 1.272 expansion off of the swing point from the high of June 25th out there. Also makes a 1.618 expansion from the swing point high on August the 20th out there. So up against a very strong resistance area. I do expect that we will see the yen take this area out. What gave us the first clue out here were these two wide-ranging bars as it was coming up into that area. You might say, hey, Steve, well, then where is it going to go next when it breaks through there? Pretty simple. Just go from your swing point high that began our 0.618 retracement. That is the March 15th level, all the way down to the low on September 13th. And what you will see is the 0.786 region gets you back into the 82.70 and change level. So when the yen, and this is the U.S. dollar / Japanese yen, so as the price is moving up, the yen is getting weaker. The U.S. dollar is getting stronger out there. $82.71 is the next target once it breaks above this level. May go a tad higher than that because you've got a swing point high from April 2nd out at the 83.29 level. But that is where the yen wants to move to. So we've done the yen. Let's go take a look at bonds. Let's go take a look at James Bond out here, which I haven't seen the movie, but probably will go ahead and catch it, or at least catch it when it comes on to the screen on TV or pay TV out there. If we do take a look at bonds, was showing you just simply the natural harmonic nature in markets here. In the case of the 30-year Treasury, what you're taking a look at is 2, 3, 4, 5 moves from a swing point low to a swing point high. The blue shaded areas are really exact moves. Exact moves. The two yellow shaded areas are also exact moves out there. What we saw the 30-year Treasury do after it made a 1-to-1 A to B equals CD, in essence, was complete that pattern, moved lower yesterday, continuing to move lower today. Bonds want to pull back all the way to this descending trend line that it broke through. It broke through that trend line on November the 7th out there. It's going to come back and it's going to test that area, may get all the way back inside, and eventually test this apex out here that would take you into the middle. Well, what's the date here? That would be the early part of December out there. Let's go take a look at gold, see what Goldilocks is doing. You've got gold trading down $2. I do suspect that we will see gold move higher. That does not change my longer-term position. Gold really just traveling in a trading range, and it is a nice trading range for sure. I suspect that we will see the dollar get weaker. We will see gold move higher, and by moving higher, moving into the $1,800 level, $1,798. Now, if you get gold to break out above this has been a consolidation pattern, certainly going back, well, it started at the lows of September 26th, and then what created the consolidation were the highs of November of 2011. So you're talking about 1,800 down to the 1525-ish level, 1535-ish level out there. So that is one heck of a consolidation pattern. I suspect once we see gold get up there, it'll be a fourth test of those highs, and then you'll see gold move down to the lows. Probably what will happen here is you're taking a look at the relative strength indicator on my system out here. You'll probably see gold get into, as it gets up to those areas, probably see it get into an oversold, an overbought condition. Much like silver will probably do the same thing out here. Silver, the consolidation pattern, not as clear as a consolidation pattern on gold, but I would say the top of the consolidation really on silver, about $35.70. 877-927-6648. Dow off 21 points right now. Composite up 42. Apple up $1.51. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow off 21 points right now. S&P basically flat, down 30 cents. Composite flat. Russell down a point. And let's go out to British Columbia to our man Rick. Rick, thanks for calling. Thanks for holding. How are you today?
Oh, really good, thanks.
That's great. You wanted to look at Wells Fargo, I believe.
Well, you know, I don't know if you do that, but you must, because, we look at so many stocks, right?
Yes.
And earnings is over.
Yes.
And so quite often stocks are like geese, right? They just follow each other.
Oh, totally. Yeah, just a geese, or just how about just take a look at fish swimming around and how they can,
exactly. A school of fish.
That's right. Yep.
So with that in mind, I'm looking at a couple stocks. I got two here, if you have the time. But the first one is
we got the time. Yep.
The first one is Wells Fargo.
Okay, so tell me what you're doing and let everybody know what you're looking at.
Well, you take a look on a daily here. I'm just getting it set up.
Yeah, no problem.
We had a little bit of a kind of like a head and shoulder top with the neckline at about 33.50.
Okay.
And then we broke it on a daily. So now if you want to shorten it up just to I think 1 month will show it.
Yeah.
Or 2 months, actually, if you have 2 months.
Yeah.
When our first big drop, we had 32 million shares.
Yes, correct.
And we broke the neckline at, let me see here, what date would that be? 10/16.
Yeah.
10/16. We broke that with lighter volume, right?
Mm-hmm. Mm-hmm.
And so a head and shoulder pattern, very often you go back to the neckline,
Right.
which is around the 3350 level.
Yes, yes.
And like Tom and you mentioned yesterday, how seasonally we're so bullish right now. There's no reason we can't go and fill the gap at 34.
Oh, yeah. Yeah, no question. Yeah, I think that's really where it's headed to, where it will release some information for us.
That's right. And so that's what it looks like to me. 3350 to possibly 34, right?
Absolutely. There's no question. In fact, on when I was doing the show on Friday, it was Friday. It was Friday, and so on Friday, just to also just kind of make the point is, I was looking at we started looking at the sectors within inside the S&P 500. And because I've been calling for, the market was oversold, been calling for a bounce, a number of factors that were out there. And one of the, what I did was we took a look at the energy, the technology sector, and the financial sector, since they make up the majority of the S&P 500. And so the sector that was the strongest, and how I use the term strongest was just simply with regard to the pullback, was the financial sector, the XLF. And it had only retraced back to the 0.382 level, or just slightly below it, and hadn't broken the trend line. So even during the show, if you went back and you listened to the recording, I kind of threw out there, if I were looking around, that's where I would be looking. And that's what we did, my clients and I, we went long on Friday morning, the financial sector. And, we're getting a bounce. It's back inside the range. And also, what was nice about this sector is it has those two high volume bars out there at the highs, September 13th and the 14th. So Wells Fargo, one of the better run financial entities out there, should also make its run for those highs. At least that's the play that I'm in.
You're going right to the highs?
Well, I'm going to go at least to that November 6th level out there. Because it's the strongest, we'll see what kind of move this actually has. The candle formation from yesterday, Rick, if you didn't catch the opening of the Trader's Edge show, and I'll go through it again maybe after the next break or something. Very strong candle formation.
Yeah, but very light volume. No, I differ with Tom when it comes to options expiration.
Yes.
And I'm not saying I'm right.
Yeah.
But to me, I don't always count that volume because people are forced to get out. It's not real buying or real selling. It's your options that were done, correct me if I'm wrong, a lot of them were done a month previous.
Yeah, no, look, you're right. It's a volatile day, a lot of volume, and so, you can use it. You've got to use volume from a benchmark standpoint for the way that it works, for you.
That's right. But what I'm saying is yesterday we did not have very good volume.
Oh, you bet. And, we're going to have even lighter volume today, and lighter volume tomorrow, and even lighter volume on Thursday. But the candle signals are really significant reversal pattern. Number one, the candle signal we got on Friday was nothing but reversals all over the place.
Yeah.
Over the place.
Now, if we look at...
Hey, can you hang on just for the break?
Oh, yeah.
Okay, great. 877-927-6648. Rick and I will be back next. We've got the Dow down 25 points right now. Market relatively flat. You've got gold trading out at 1731. The DAX getting stronger as we speak, up 53 points. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow off 23 points, S&P down 50 cents. We're going back out to British Columbia to our man Rick, and we were taking a look at Wells Fargo, the financials, and Rick was taking a look at a head and shoulders pattern out there. So sorry about that. Thanks for holding on, Rick. I appreciate that. And you know, we were just briefly talking about volume up here, and yesterday's volume certainly, wasn't of any kind of magnitude, off of the bottom. But, candle patterns are also things I think you have to pay attention to regardless of volume.
Well, and the seasonal factor you guys mentioned yesterday.
Yes.
That is unbelievable. And the same thing, it's really quite funny, and I think it's because the big boys are gone.
Yes.
And the little guy buys the market, because in Canada, so I bet you 90% of the time, if the S&Ps are flat,
yes,
we'll open down and end up rallying through the flat line and then maybe settling flat.
Yeah, yeah.
You know what I mean?
Yes.
Because our volume, when you have your Thanksgiving holiday, that's what I'm trying to
yeah,
talk.
Right.
Our volume is literally at 80% less.
Yes, no question. So we're really in a very light volume week out there.
So with that, with Wells Fargo in mind.
Yes.
Now I put it on let me see. I think it's a 3-year monthly.
Okay.
If you could do
I
that.
can do that. Yeah, I can put it on a monthly chart. Yep, no problem.
Now there's some problems down there. We broke the 2663. and so forth. On lighter volume, we've had three QE3s.
At least.
That have just, I could be wrong, but that's just hyperventilated the market.
Totally.
Big time.
Absolutely.
And I don't have a clue where they're finding the money when you got a $16 trillion debt. That's one of the craziest things I've ever heard in my life.
Well,
but anyway, that's beside the point. That's another story.
Yeah, exactly. We could do. Well, they already do hours and hours and hours on that.
But anyway, so what I'm trying to say is, Tom's looking for an ABC down in the market, and
yes.
I look at an IBM chart as well on a long term, and which is maybe one of the most stable stocks.
Yes.
And it looks to me like it's got to pull back. It's got volume down, or I don't know. I don't. I know I'm talking a lot here, so I
no. You know what? Look, I'm in that camp, but my legs are starting to come out just a bit. And,
no, that's fine.
And really, the reason is, what I like to do, what I know that you like to do, is really just step back and take a look at the chart and see what the charts are telling you. Because I think that's the only way that you can, that's the best way to approach the market, is look at the patterns that are out there that you're familiar with. And one of the patterns, so I'm going to put up here on the screen, I showed this yesterday, which is the S&P 500, the weekly chart. Now, this goes all the way back to the March lows, and it shows one of Bud's channels, okay? And which are just simply fabulous out there. And as we take a look at it, so I'm coming off of the low from March 6 out there, 670, the open 680. And what happened last week in the S&P 500, it came all the way back down, and it tested that level. Right to the T. Rick, how does that even work? Comes back there, tests it, reject it. Now, it's where the back was up against the wall, so it was kind of an easy trade. Didn't mean that it was going to work out, but it was where if you were up at the highs here and you were saying, hey, where would be an ideal place to go along the market, anybody would have looked at the chart and said, well, geez, if you can come back to the bottom of the trend line, that's your best, reward to risk out there.
Well, you know what? I think Obama and Boehner, your House leader.
Yeah.
I think they must have been listening to Bud and said, okay, let's start creating optimism here now.
Yeah, exactly. I think so too. And what's really cool is I started really taking a look at this even earlier this morning, was at the March lows. You had on a weekly basis, you had a nice bullish engulfing candle. Now that really started everything off. The first time that the trend line came down and in essence tested it was back in August of 2011. Bullish engulfing candle. Tested again, tried to break through in October of 2011. Boom, bullish engulfing candle. The same thing in December of 2011 out there. Bullish engulfing candle. Then it comes down in June, that June 4th low. On the weekly basis, it's June 8th out there. Bullish engulfing candle. That means, Rick, that this week, if the S&P closes above 1379.86 out there, you're going to have another bullish engulfing candle at the bottom. It just says that, look, what it does, the cool thing is that for the bears out here, you know where the line is drawn. Not that it can't go back down there and test it. I'm not saying that it won't because of the volume and everything down there. But, right now, so that's on the weekly basis, it's held pretty well. And on the daily basis out here, I was showing this earlier, this 4-candle pattern formation that created yesterday, is very, very powerful. You had the similar pattern candle back on the daily chart in June, on June 4th out there. And I guess I was going back during, in between shows, going all the way back to 1928 and identifying these patterns out here. And not that some of them aren't broke. When they are broke, it tells you that you're going to move down typically the next swing point or complete some type of, A, B, C, D down pattern. But what formed here, off of the lows on a daily chart is very, very powerful. And so
it is.
That says to me we're going to get a stronger bounce at least than what people think. I was preparing to go short next Wednesday. I'm not so sure just yet. Court's out on that one because this is a really strong pattern that's out here.
Well, like I say, I look at ExxonMobil.
Yes.
It's doing an inverted head and shoulder. A lot of things are kind of at a neckline right now, and I think we're just going to get a little bit of a rally, and then we always come back to the neckline again.
Yes.
And I look like a stock like IBM. There's problems way down below on a monthly.
Yes.
Unless it's defying volumes, but it looks sick when you look at a monthly 5-year volume chart. Maybe there's nobody. I really don't know why, But
I know one thing's for sure. There's a lot of liquidity in the market that's on the sidelines that isn't out there. You know, and Tom's white paper shows it. Whenever that liquidity starts really showing up, going through the system, I don't know when that's going to be. Prices and everything will start taking off.
Yeah, well, like I say, the big boys are usually gone during the holidays, so it'll be a perfect time to rally it.
Exactly. You know, I think Santa Claus might have shown up. You know, usually it's at the Thanksgiving Day parade here in the U.S. So I think Santa might have shown up just a few days early.
Yeah, well, that's right. And less people be trading because isn't Walmart open now too?
Yeah, I think they're opening like 8 o'clock or something. You know, to me that's the most unfortunate thing.
It is. It takes away. Yeah, it takes away from quiet time. Yeah.
Yeah, it really does.
All right, thanks a lot, Ed.
Hey, you bet. Thanks for calling. I appreciate it.
Bye-bye.
You bet. Let's go up to Nick in Oklahoma City. He wants to take a look at Aruba Networks, I believe. Nick, how you doing?
Not bad. Not bad. Thank you for taking my call.
Oh, our pleasure. How long have you been listening to TFNN?
About 3 years.
Oh, that's great. How'd you stumble upon us?
Probably something led me to you through IBD.
Oh, okay, great. Okay, cool.
Yeah, one of the links.
Cool.
You guys somehow interrelated, and I find your philosophy and approach overall acceptable, even though I'm mainly just educating myself whenever I have a minute.
Well, look, we're all about education here. In fact, Nick, we would love to better know you and what you're looking for. So if you get a chance and you're on the homepage of TFNN.com, we've got a new survey. You'll see it under Breaking News. Just click on it and fill it out. And it's for folks like yourself. We want to understand, who's listening in, how it is that we can serve them, because it really is all about education. That's what we all love to do. It attracts each of us. And what we love is that we learn from our customers, or we learn from our clients. So we'd like to be able to learn from you and everybody else out there that's listening. And if you get a chance, please go fill out that survey. This holiday weekend would be a good time to do it as well. Plus, we put $25 in your Tiger Dollar account, so that's a good thing.
That's always a good. Yeah. Well, yeah.
So you wanted to take a look at Aruba Networks. Tell us what you're looking at and how we can help you.
Well, it's one of the former IBD leaders, which obviously came down.
Yes.
And these days, it looks like there is generally interest in networking solutions.
Yes.
To purchase Cisco purchase of another company.
Right.
So I thought Aruba would be the one next on line.
Okay.
Yeah. The result, it further came down because it was not selected.
Yes.
Even though, again, time will show.
Yes.
And, it's to me, it looks like it's hovering somewhere low enough to be of interest. I nibbled
Yes.
about that, but wanted to see your intake on that and see what you think.
Sure. So if we take a look at Aruba Network, so one of the things, that my eyes are first drawn to, perhaps yours as well on the chart, is the most recent breakout. So that's the first place that I go. That's that open window or that gap out there, which would take it to the August 24th date. So it moves up with almost 13 million shares, 12.7 million shares. The day before, 4.5 million shares. The high there was 16.95. So as I just simply draw a line across that little open window out there, that level has not been tested at all. It tried to get down there on the 31st of October when it got down to a price point of 17.64. You had a nice little bullish reversal signal that got negated the following trading session on the 2nd. And right now, the support area on this is still the low of October 31st, 2.8 million shares. Now, as this came down into it a couple trading sessions ago on the 19th, so yesterday, was 5.2 million shares coming down there. What that says to me is Aruba Networks wants to go repair this open gap, this open window here. And so your first, I would say the best point of entry here would be as Aruba Networks comes down and tests the August 23rd level, 16.95. And what you would be looking for there, Nick, you would ideally like to see Aruba Networks come down, get somewhere below 16.95, close back up above it, and ideally do it on less than 4.5 million shares. The lower the volume, the better, and that would set up a possible buy. Now, the problem you have with the Aruba network, so that's where the buy would set you up. The problem is where you're going to run into some resistance. And in the case of Aruba networks, the real resistance is going to be the gap down, the sign of weakness from October the 2nd out there. So if you take a look, so it made a high, if you're looking, it made a high on October 1st with $23.19. But then in the next trading session, what it did was it gapped down with 9.2 million shares. Not the same level of volume as when it, gapped up with 12 million shares, but that was a sign of institutional selling. That wasn't you and me and Rick and other individuals. Certainly we might have been selling, but more so a sign of institutional selling. And you saw another sign. I think they came out with earnings a couple trading sessions ago on the 16th, and it sold off. So you saw more. I'm sorry?
Earnings were pretty good.
What's that?
Earnings were pretty good. And
yeah.
It popped up, but then something just came apart.
That's right, sold off. So what you saw was institutions taking advantage of that good earnings report and getting out of their position on the 16th. So you've got another sell-off day. So it says that, resistance on this is maybe the low of November 16th out at $20.54. It certainly is going to be the high of the October 2nd level at the 21.80. So this one becomes a tough call because it's really in a downtrend here. It continues to make lower highs. Take a look at just simply coming off of the high from May 4th. Then you come down to the next swing point on July 7, 2011. That's a lower high. Take a look at October 27th, a lower high. Another lower high, just slightly lower on February 2nd. You come all the way back to the ones that we were looking at. What this continues to make here is just simply lower highs. That says, that really your best buy on this thing is if it comes back and it tests the $12.70 mark. You've just got, I don't know if the right reward to risk is in place. You'd have to test it out, or you'd have to do the work on it. But it's possible that 1695 area for rejection on the light volume might work for you. But you're going to have to be careful as this gets into $18 and change. Okay?
Well, fantastic. Thank you so much.
You bet. And thanks so much for listening. Happy Thanksgiving to you. We'll look forward to you going over to TFNN and filling out the survey. We'd appreciate it.
Okay.
Have a great day. Let's go to Mike in Cheyenne, Wyoming. Mike, thanks for calling. Thanks for holding.
Hi, Steve. How you been?
I'm doing great. Yourself?
Doing awesome. It's almost Thanksgiving, and I'm on vacation this week, so life is good.
Okay. Now, do you usually take the week of Thanksgiving off? Is that kind of a traditional?
Yeah, I try to. It's you only have to burn 3 days vacation, so that's a good deal.
Okay, good. Okay, I like the way you're thinking there. Ah, that's great.
Absolutely.
Okay, good. So, what's the weather out there in the Wyoming area?
Right today, there's no clouds in the sky, and it's going to be like 50 degrees, so it's going to be an awesome day.
Okay, good. You guys don't ever have clouds out there, do you?
No, that's why they made this song, "The Skies Are Not Cloudy All Day, Home on the Range."
Okay,
it's really true out here in Wyoming.
That's good. When we get back from this break, we're going to go and take a look at Verizon. VZ is the ticker symbol. It made one of Mike's hammer candles, I believe, on a couple trading sessions ago. We saw the reversal in the market, similar to Apple out there. I think it might have gapped up yesterday. Had some pretty decent volume. Right now, we've got the Dow off 11, S&P's up 99 cents. We'll be back with Mike from Cheyenne, Wyoming in just a moment.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now.
888-888-8585. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for. Try Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back to the Money Masters show, folks. The Dow off 25 points right now. Otherwise, the market's relatively flat. Composites off 3. Heinz out with earnings. They did operating income $391 million versus $358, and revenues $2.8 billion versus $2.01. Yesterday, it broke out above its highs, pulled back so far today, bleeding a little bit of red ketchup, down about $1.44. Let's go back to Mike in Cheyenne, Wyoming. We're going to take a look at Verizon. Thanks for holding, Mike. I appreciate it. Tell me what you're looking at and how I can help you.
Steve, I was looking for an entry point in Verizon. I was kind of looking at the charts, and
yes,
I was going to ask you if you should wait, or if I should wait until it gets down to like $35 a share.
Okay. So let's take a look at it. Let's take a look at what Verizon has done so far to date. And I actually looked at Verizon over the weekend along with a number of other stock charts and looked at as a possible buy at the open yesterday. And the reasons are, and I'll show you the patterns out here if you're watching along on Tiger TV. Number one, it completed a 1 to 1.618 A to B equals CD down. The A point on this was the high off of October 5th. 47.32. Your B point was the low put in, the swing point on October 15th. down at 43.75. Looks like it probably did about a 0.618 retracement up to a high on October 18th. Then goes ahead and makes a 1 to 1.618. This was the actual price projection, $40.64. On Friday, gets down to a low of 40.51. The bulls step in. They form this hammer candle out there. That is a reversal signal coming in when you're completing a 1 to 1.618 A to B equals CD is something to pay attention to. Then what it also did, the most recent set of swing points would take you back to August 23rd. So if you went from the lows of August 23rd up to the high on October 5th, that was a 1.272 expansion of a swing point. So you got another one of the Fibonacci summation numbers coming together, 1.618 A to B equals CD down, 1.272 of an expansion of swing points. Oh, and then there was a third one out there, Mike. It was a retracement. It was off of the low from April 10th. Verizon's low out there was $36.80. Up to the high was a 618 retracement. So in essence, it set up a Gertley buy pattern. It did that on Friday, and yesterday you had just simply it gapped up just a bit, moved higher, closed at its session highs. The only reason I didn't take this trade, there were others that we went ahead and we put on yesterday from a long standpoint, was I wasn't sure what to make of these two high-volume bars on June 22nd and June 25th out there. And it looks to me like that's really where resistance was. So there were a couple other trades that I was looking at that that did have better potential setups as far as less resistance on the way up. So it looks like, to me, these are areas here in the low that you're looking at on those two bars around 43.39 might be where you get the turbulence sign that could come on. But I like the chart. It's a good dividend-paying stock. And the question is, should you wait till $36? Here's the thing. If it ever breaks that hammer, so that November 16th, here's what you'd want to be watching. That's the $40.51. Then the answer to your question is yes. 36, coming all the way back down to the swing points of April of 2012. That's where it would head to. Because when you break a hammer, if you're long, you're wrong. And when you fail at a hammer candle, especially when you have this much geometry coming together, it'll head down to the swing point all the way down there. So, but you're going to have to be patient now.
Okay, great.
All right. I hope that helps you.
Absolutely.
It's a great education.
Happy Thanksgiving, Steve.
Okay, same to you. It's a great education. You should go look at Verizon, folks, and maybe replay this because that is a lesson to share with you on a number of patterns coming together. That is on Verizon. Stay tuned. Basil Chapman up next. Victor Jones from 12 to 1 today, the option hour. Daryl Martin 1 to 2. David White 2 to 3. Ken Shreve from 3 to 4. Tom will be here from 4 to 6. He's out buying real estate. Have a terrific Tuesday, folks. A thankful Tuesday. I look forward to seeing you tomorrow morning.